So I'm convinced gold must lead silver. So I expect the 1350 level to be challenged, to break to the upside, to be tested like the 1300 level is being tested now, for that to hold. And once we get above 1350 gold, we'll see silver accelerate.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. SD Bullion continues to gain industry market share by being one of the premier low-cost options for physical precious metal bullion buyers and sellers. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Discreet, low-cost delivery is both fast and always fully insured. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today, one of the top silver experts, David Morgan, the Silver Guru from the Morgan Report. David, thank you so much for joining us today.
That's great to be back. Thanks, Elijah.
All right, I'd like to discuss about the gold and silver markets. Now, we saw gold broke through the 1300 level. What is your perspective on, where gold is going from here? Is it just nowhere to go but up, or what is your perspective?
Yeah, pretty much what I've been stating since, I guess, late December, early January, that I expected to see the 1300 level breach to the upside, which we've seen, as you said. And then I expect it to be tested from the top down, meaning to get to 13, I forget the number, 20, 22, whatever it was, US dollar basis, and then a little test down to 1306, 1305, 1300, who knows, but somewhere in that range, and bounce back up higher. And that's a good indication. It's almost textbook technical analysis. So that's what I expect, and that's what it's doing right now. I think it'll continue. Silver started to catch a bid and started to get the gold-silver ratio down from like the all-time, from the 87 range down into the 80-something. But it's given back some as well. I really know now, this go-around, that gold's got to lead silver. So I'm convinced gold must lead silver. So I expect the 1350 level to be challenged, to break to the upside, to be tested like the 1300 levels being tested now, for that to hold. And once we get above 1350 gold, we'll see silver accelerate.
Now, as for, in 2019, I know you said in our last interview, and this is just at the beginning of the year, we were looking at precious metals, and you were saying, 2019 is probably going to be a pretty good year for gold and silver. What is your perspective on how high gold could go in 2019? I
don't think it could go much over 1450. I think that's probably about as good as we're going to get. But, I always have to give the caveat, Elijah, as you know, I'm tired of doing it in a way, because people, but it's true. I mean, if we get some huge catalyst, we get something in the Middle East, or we get a terrorist attack, or we get, something in the government or whatever, there's a possibility then you'd see, these metals take off.
Definitely. Now, you're saying 1450 for gold. What about for silver?
Well, I don't know. Take a ratio of about 70 of that, and you could get your silver price. I mean, I don't think I'm looking for the gold-silver ratio, if this year goes as I think it will, to see the gold-silver ratio go from that 87 down to about 74. So if you could do the math on, say, $1,400 gold, 1450 gold, 1350 gold, you'll get a number for silver.
With respect to silver, I know you were recently just interviewed, and you were saying that the juniors are looking actually really that they might have a lot of upside. Can you tell us a bit about the junior mining stocks and why you are so bullish on them?
Well, they're so tiny. It's like the silver market itself. These are very micro cap companies. So just a little bit of new buying will drive these stock prices higher and higher. So that's a fact. So it's nothing magical about me or any belief system. It's just a fact that small companies move rapidly up and down. And there seems to be some interest coming back into the metals. And there's some interesting stories out there. When I put that article out, I was trying to be a little more specific to the paid people, the Morgan Report, and hinting for people that might want to subscribe. But we have one junior that's doubled in price last year in a crappy market, and it's going to go much higher. In fact, I think it's one of the best silver discoveries I've ever seen. And, I'm pretty conservative. And then there's a technology breakthrough company that's replacing cyanide. I've been telling that story for a long time, but that stock is down substantially. And this is really putting your money to work in an environmentally friendly way that's really a game changer for the whole industry. And I'm the only newsletter writer that's writing about it. So it's the time to get in if you're so inclined to do speculations. And by the way, Elijah, I am going to do a webinar for free for everybody on the art of speculation, because if you do it properly, you could lose 9 times out of 10 and still make a lot of money. And I'll briefly say, let's say that you were going to bet, let's say $100 on 10 stocks equals speculation. So you put $1,000 in 110 different stocks, and all nine of them went to zero, because some of these companies do fail. But one of those 10 companies went up 50 times. And this happens in that sector. So that one stock would still cover all the losses of those other 9. And that's the art of speculation. The problem with the art of speculation is most people don't speculate properly. I'll go into that.
Definitely. And with respect to speculation, are there maybe just a couple points? What are some of maybe the pitfalls that people fall into not doing speculation correctly?
Well, they fall in love with the story. I mean, all these things are called story stocks. And even the 2 that I mentioned, or actually 3 that I have, are stories. And they're great stories. But I've been in this industry for over 40 years, and I've heard story after story after story. And I get people that are pretty smart in my book, but they just, there's that psychology to people that I have as well. I'm human. But they get the story, and then, the company can't raise the money, and they can't, move the project forward or whatever happens. But they're so, I'll almost say, addicted to the story. It's so good. They don't want to let go. And if you do the speculation properly, and you've got 10 of them instead of just one of them, but most people fall in love with a story or 2 stories, and they buy way too much of it. What I do, and I teach, is like, for example, I know I've said this on the radio before, but Western Copper, I mean, when that was 65 cents as a speculation, when that became a $3 stock, we bought more. Why? It was a different company. It had the Penasquito deposit, and it was being bid after by Goldcorp, by Glamis rather, and then Goldcorp took over Glamis's position. So it was a whole different company at that point. It wasn't a speculation anymore. It was basically a near producer. So very few people teach that. But and you only do it if and only if that discovery is made. So, and it's a viable discovery. I mean, it's big enough that's really going to go into production. So there's a lot to it, but people overthink it. But it's basically, people hate to be wrong. People love stories, and they will basically, as I said, and I know I'm repeating myself, but I'm warning people. No matter how good the story is or who's telling the story, a speculation is a speculation is a speculation. You want to be in a position where if you bet on 10 and 1 wins and 9 lose, you're going to make a lot of money. You don't want to be in a position you put a lot of money into some story that you really believe, and it goes down, 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 down. And I see that. I've seen it over and over again, and it's really disheartening to me.
Now, with respect to turning back to gold now, you were recently talking about in a video how even though gold is flat for about, the last 5 years, it's actually up in other currencies. So can you talk a bit about that, how sometimes our U.S.-centric way of thinking kind of maybe gives us a skewed view of the gold market?
Well, it does. I mean, when you speak in generalities, there's always exceptions, but generally speaking, most people obviously they're in the U.S., and a lot of others actually look from these, a pair of glasses that's only focused on the U.S. dollar, and that's how they measure everything. And if you look at gold in dollar terms, U.S. dollar terms, it's done horrible. But if you look at it in Canadian dollar terms, you're pretty happy. So these currencies do obviously fluctuate against each other, and it depends on what measurement you're going to use to measure your gold holdings by, which currency. But depending on which one you want to measure, actually gold is not that bad a market in several currencies. And that's something I think people need to bear in mind, because if you're looking at thinking that gold's only priced in US dollars, you're far, far mistaken. And it's not how a world market like gold works.
Now, I know last time we had you on, you were saying that the Fed would not really have much more room to cut rates if we went into a recession because, rates are still pretty low. So what is your perspective on what the Fed will be doing? Do you see us going into a recession sometime soon? And if so, how will the Fed react?
Well, I do see us going into recession soon. In fact, I believe it'll happen in 2019, but the mainstream financial press probably won't acknowledge it until 2020. And the reaction will be to stimulate the economy by cutting interest rates is the most likely. There is a caveat, though, and I'm pretty strong about this, that the market forces could take over. I wouldn't say would take over, but could, which means that the long bond, well, the debt markets across the board, from the T-bill all the way to the long bond and everything in between, starts getting pressure to get higher interest rates because the faith in the dollar is starting to wane. People are losing faith in what I'm going to get paid back in and how valuable those dollars I get paid back with are going to, what their purchasing power will be. So there's a possibility that the market itself could take over on the interest rate front. Although the markets are so doggone manipulated now, it's almost impossible to even imagine that scenario. But it has happened in the past, and I forget who coined the term. It might have been Craig Hempy from TF Metals. Said, there is the mother nature of the financial markets, and there is. There are immutable laws that do take hold in men's affairs. And one of them is the possibility that interest rates will get away from them. So I'm not saying that's going to happen. I just want to be on record of having said it, because the Fed could say, well, we're going to lower the discount window. We're going to lower the Fed funds rate. We're going to do this. We're going to stimulate the economy. But those in the bond pits say, you know what, I demand a higher interest rate because I don't want to hold these dollars as long. And to hold them, I want you to pay me more.
Definitely. And that is an interesting point that you bring up, that, even if the Fed does change interest rates, it is not necessarily a guarantee that they will change. It has to do with the market as well. It's not like they can just set the interest rates and that's the way it is. It is a target rate. So that's the rate that they're aiming for, correct?
Absolutely. I mean, the market forces, if we had free markets, we'd have a lot different interest rate profile than we have right now. I mean, if the market was able to determine the free interest rate based on the risk-reward profile that the investment community at large determined, we'd have a lot different world. But we've gotten to this place now where we've got the central authorities basically dictating what the interest rate should be and how they should be, and on it goes. And it's really a huge distortion into the market. I mean, I get criticized for being a free market advocate, but, it'd be nice to try it. We haven't really had it in a very long time.
That's a very interesting point. So how do you think the markets would look different if the interest rate was set by the free market?
Well, you would price capital as being something rather precious, which means that there would not be the malinvestment you have now. When money's cheap, when anything is cheap, it's not valued very high, right? I mean, if you get Cheerios for 10 cents a box, you might find that to be a great bargain and buy a couple cases, but after a while it's like, who cares? So when money is cheap, it's kind of wasted. But when it's a high price for money, it's coveted. So if interest rates were, let's say, 5, 6, 7%, something that I'm more familiar with as being sort of a standard cost of money, then it's more valuable. It costs more to borrow, and you're more prudent with it. You borrow it more carefully. You borrow it if and only if you need it. And you don't go to the discount window and leverage the heck out of your position to put the money back into the Fed and get this humongous spread of just sitting there by going to one window and putting it back in a different bank and getting this interest rate, basically free money. I mean, I don't want to digress too far, but I gave a speech in London, I think my last trip over there, about interest rates and how you cannot keep an interest-bearing account indefinitely. They always fail. And I gave the example that if God gave Jesus, 1 cent in his account and compounded it at 5% over this last 2,000 years, basically the amount of compound interest on that 1 penny at this point in time would be worth the world's weight in gold 4 times over. So these things can't last forever, and they don't. And that's why you see throughout monetary history that there's always, a financial crisis, a reset, a new currency, you name it. It happens again and again and again.
And one of the issues as well, I mean, as you were talking about, is we live in a limited world, right? And you actually just put a video out on this, that global growth has reached its limit, you said. So why do you think that?
Well, I don't know if I said that. It was a video I did because, I do my weekly perspective. And this author said that we may have reached its limit. And I was agreeing in part with that because, one, I don't know. There's always new technologies. I'm too smart because I've been wrong, and I learned from my mistakes to say this is it. But what I do see is that a lot of the new technologies really aren't benefiting society at large. I mean, the difference between an iPhone 10 and an iPhone 6 isn't significant enough to really make my life significantly better. And you can use that same analogy across the board in a lot of areas. I mean, as food production got significantly better, as transportation got significantly better. So we're starting to stall out, I think would be my point. And thanks for letting me address it, because I wasn't necessarily saying I absolutely agree, but I am asking people to think about it. Think about it. So for food production, it's kind of maxed out. And when you've got 40% of the financial system as the GDP, where we're pushing paper back and forth, it really isn't doing anything productive for the physical economy. It's just, playing money games. We got problems. If 70% of your economy is based by buying stuff, we've got problems. If you can't pay the interest only on your credit card, you've got problems. So we really do have a lot of problems, and there aren't that many people looking at it. So my point being, Elijah, that all these empires fail eventually. It's cyclical, and we're at the top of the cycle in my view. And does that mean everything's stalling out? And the answer is no. There's probably a brilliant invention out there right now that I don't know about that may be hugely beneficial to society at large. I don't know. I'm not going to discount that too far, but I don't want to be so closed-minded saying that's it. Trees not going to grow any higher. Could. But if you look across what you can go out and touch, there's a lot of areas that are stagnant. They're just basically, and that's why I use the word stagflation, because we see low growth to no growth to contraction, basically a contraction in the physical economy with prices going up and up, because you can still print money, but it's not producing anything worthwhile.
Now, one of the new technologies that actually I was going to have you talk about a bit is actually interesting because it has to do with sound money. If you wanted to touch on how you can actually, you can use silver at Starbucks now, actually?
Well, I was down at the Acapulco conference. I just got back, and I'm what's called an ambassador, which I guess you could say I'm promoting this idea that you can put silver back into the monetary system. And there's lots of ways to do that. I mean, there's gold money and there's other places. Most of those just tokenize physical metal like gold or silver, platinum, palladium. In this system, it's called the load system. You can find out more information at ag.load.one. So there's the URL is actually ag, the symbol for silver, ag.lode.one. And it's basically it's a silver bank. So the metal mass is silver only, not gold. And so I was down at Acapulco. There's two sides. There's the metal mass, and then there's the token. Put the token on my phone in front of everybody. It was filmed, actually. I walked over to Starbucks and used that silver to make a coffee purchase. It's on film. It's kind of fun. I was the first one, and it did work.
That's really cool. So what do you see as the potential for this? Could this really reintroduce sound money into the monetary system?
Well, you know me, Elijah. I mean, from a super highly idealistic perspective, which I am, I do see it having the possibility of changing the system. Whether or not I'll get enough, momentum and enough interest and enough people to actually do any good or not remains to be determined. And I'm not overly hopeful that it will, but it certainly gives people that are alive, awake, and aware of the ability to, put some of their idle silver to work for themselves. And in the long run, from the idealistic perspective, it'd be awesome to see a competing currency compete against, the banks at large. And of course, that's kind of one of the main themes at the Anarchapulco is these competing currencies. I'm all for competing currencies. I'm not an advocate of every one of them. I'm more partial to, the old school that it's got to be specie money. It's basically got to be some hard value asset of some type in order to be considered having intrinsic value. I mean, you can blockchain tea, lumber, real estate. I mean, there's lots of things that you can use the blockchain to quote unquote monetize. And I don't have anything against any of those. It's when you just say, well, I'm inventing this XYZ coin. It has no intrinsic value, but it's worth this much today and it's worth, 10 times that much tomorrow. And it's what's changed. What intrinsically has changed in that? And the answer is, well, a lot of speculators came in, just like some of these penny stocks, heard the story, it sounds good, and they bid the price up. But as far as is there any real change in value? And the answer is no, there isn't.
All right. Well, David Morgan, thank you so much for your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, I'll just repeat. I think we're interested in this load project, and I am involved, but not at a very big level. I did contribute some silver to the money mass. It's ag.lode.one. And if you don't want to do that, which is fine, just go to themorganreport.com to sign up for our free e-letter that comes out about 4 or 5 times a week. Anytime I do an interview like this, I just send it out to the readership so they can, listen to it or not. And we do make some other offers on there from time to time. But overall, it's and every weekend I do a wrap up for people to kind of save them time. So that's it. Thank you.
Awesome. Thank you so much, David.